So that's all you're going to hear from me. I'd just like to introduce next Rebecca. As I say, Rebecca Healey's work covers much work on the ISO side, but also on the impact of market regulation on all asset classes. She's interested in the impact and rise of fintech in capital markets and the impact of ESG and sustainability in asset management. What she has in the ISO hat is being a member of the TC322, as it is, the ISO Committee on Financial Services, where she leads the Technical Advisory Group on Sustainable Finance. And she's also the convener of the Coordinating Committee on Climate Change Task Group, which coordinates responses to relevant consultations that ISO make. Rebecca.
Thank you very much, Peter, for allowing me to speak today. Basically, if we go to the first slide, please, David. What I wanted to talk today was really looking at the individual roles that we have within ISO and how that is assisting the asset management community in particular in relation to the work that TC322 does on capital markets. And that obviously is going to play a key role in the overall objective that Sonia mentioned earlier, just in relation to more effective involvement of capital markets within the transition to sustainable finance. Next slide, please. And the next slide, thank you. So one of the aspects that we've focused on is really, and we've spoken a lot about it today already, is actually how the asset management community can be more involved in sustainable finance and increase the investment in sustainable finance. And we started talking to asset managers a couple of years ago just around what they needed. And the overriding message was obviously more access to more accurate data. That is a core component of encouraging greater investment in asset management. There's been a lot of discussion in the industry just about the fact that data is patchy, it's inaccurate, it's subject to rating agencies and the interpretation. And one of the aspects that we've been working on within TC322 is actually how can we connect the two? Asset managers need better access to accurate data. Companies are obviously producing that data, but there seems to be a gap in being able to access that information. Now, from a regulatory and policy perspective, we're looking at ISO standards becoming involved in how there is greater standardization across the globe. And ISO does have a critical role to play here, just in terms of we're looking at the fact that ISO enables access to industries in a specialist in a particular field. So, for example, if you're talking to environmentalists, then they will be able to, from a grassroots up, provide the information that asset managers should be taking into consideration. But given that that's done often currently at the moment in terms of regulatory reporting, it's done at a national level. That doesn't actually help an asset manager who's looking at it from a global perspective. So that's essentially the beauty of ISO. It's taking the specialists in their particular field. It's providing that global baseline, which obviously Lee White spoke about, and that common language to enable the ability to increase trading. So again, going back to the effective capital markets that Sonia spoke about, the sound debt management, but also improving competitive cooperation to eliminate any inefficiencies. So where do ISO standards fit in all of that? It's essentially we're looking at investors being able to consume data direct. We've looked at ESG as a separate entity, but actually now it's not really, it shouldn't be considered as a separate entity. It's actually more about effective risk management. And asset managers increasingly need access to granular, in-depth, non-financial data. They need to be able to incorporate that data into their ESG modelling in a similar way that you would effectively use financial data. So it's a whole new set of data that's now required. And it's looking at it again, as I mentioned earlier, rather than looking at it in silos, in isolation. So for example, looking at what an energy company would report in the US, that asset manager needs to actually look at that company around the globe. And the issue here is if they can't, then what's starting to happen is you're seeing this, what we would describe as exclusion policies, and firms actually looking at what is the inherent risk of me making that investment in an area which actually technically would be too risky. So this sort of how greenwashing is actually starting to lead to greater exclusion policies, which would prohibit that transition that Sonia mentioned earlier about how do we get from A to B. Using data agencies is risky because the industry ratings actually conflict with each other. Again, going back to Dr. May Young's comments earlier. And also it conflicts with the asset manager's interpretation of what ESG means for them and explaining to their investors about how they are approaching ESG. You've also got issue-based analysis, which is more sort of the primary, and then bringing that into secondary market access. And I think secondary market access is where it's potentially going to get very interesting because you have a thing called liquidity risk, which is obviously a key focus area, particularly for ESMA's spoken a lot about liquidity risk in markets. And I think, again, this is an area that is increasing in terms of how asset managers can engage. We've also got a challenge in terms of data is currently produced often at the group level. And if you are trading in secondary markets, you may need that information at a product level, particularly in fixed income and for more complex equity products. And you also need to take into consideration subsidiary and supply chain risk. So what we're starting to think about is actually, as well as the work that's going on above at ISO that Peter spoke about in the Sustainable Finance Working Group in 32210, but what can we do at a grassroots level? So David, if you wouldn't mind moving to the next slide, please. We're now focused on how asset managers can get access to the data that they actually need. So asset managers are already using ISO standards. They are in play, and they are in play in terms of their workflow. So we've got something, and again, this goes back to how do we leverage what we've already got in existence so we can speed up adoption. If investors are able to get access to ESG data direct, it can fast track the process because one of the reports that we wrote a couple of years ago was Flight Scam, and this was a direct example of how people were experiencing it on the ground. And this was in relation to Sweden, what they described then as Greta effect and the immediate knock-on impact on airline stocks and how the airline stocks were being impacted. This was way before COVID, but it's the very interesting aspect of how quickly end investor behavior is changing, and people want to make a difference in terms of the way that they're investing, hence with the sort of massive uptake that we've seen in ESG funds and the interest in ESG. Now, for a firm that's making that investment and investing on behalf of people's pensions, they need to make sure that they get access to non-financial data in order to better understand what those inherent risks are. And at the moment, they are totally dependent, as I said, on getting data from third-party companies. The data is sporadic, it may be inaccurate, there may be conflicts, and this is all part and parcel of the evolution that we're on as an industry and as society in actually understanding what ESG really means at a base level. So what we're looking at is really how TC68, which again is sort of the capital markets aspect of ISO, and also taking into consideration the work that the Sustainable Finance Group are doing, taking into consideration the work that the CCCC are doing, particularly ahead of COP26, is how can we educate policymakers, educate regulators, educate industry on what is actually happening within this space so that people can find solutions to the problems they face today rather than just waiting for regulation. We do need it, admittedly, but it's just what can we do today? So as it stands, we have already responded, as Peter mentioned, we've responded to the ESA request for climate change disclosures, the SEC request. We've also contributed with Peter to the response, as mentioned, to the IFRS. Next slide, please, David. So we are looking at taking not only education, but also where we are today. And I think this is really trying to tie up those loose ends of where the industry is at and where we would like to be. So all this information is sitting out somewhere in the ether. You know, companies are disclosing, they have national requirements to disclose, but there may be information, for example, on greenhouse gases, but that is completely distinct and separate to order management and execution management systems that asset managers use in order to understand their risks. So again, going back to what Dr. May was talking about initially, then there's a lot of individual firms that are setting up their own taxonomies. So this is creating a myriad of information that people have to make sense of in order to be able to understand the risks that they face. And again, going back to an example from an asset management firm that we spoke to, they were looking at their investments and the inherent risk that potentially sat in the system as to what they needed to divest from in order not to incur greenwashing concerns and the reputational risk that they potentially faced. They invested in a transportation company. The problem was most of the profits from that particular transportation company was a railway and it transported Chinese coal. Therefore, inherent risk. Now, if they could better understand exactly what the company was investing in, then they could decide whether that was still acceptable or it was no longer acceptable. It comes back down to transparency of information. Have done that could be incorporated. And this is where some of the work that TC322, so for example, ISO 17442 is a legal entity identifier. The data that's being reported at the moment might be at a group level. This would enable it to be tracked and related to actually the legal entity identifier in relation to ESG activities and reporting. That is something that is used today for reporting purposes. We've also got the entity legal forms. We've got the ISIN, now International Securities Identification Number. This means that you could actually identify a green bond, the attributes assessed to that green bond, which could enable an asset manager to safely invest without incurring risk of greenwashing. ISO 20022, that provides the methodology for the creation of financial messaging. We've got the unique product identifier. These are all building up the layers of enabling asset managers to take information from companies and ingest it. And if we go to the last slide, David, please, that means the information flow can be transported to an asset manager that they can take into their order management systems. And we're looking at the creation around what we would describe as an ESG digital barcode. So what we want to focus on is maximizing the companies that asset managers can invest in, and to do that safely and to avoid any unnecessary greenwashing, they actually need to understand the risks that they're facing. A classic example would be PG&E, which was considered a safest houses bet in the US, but their governance structure was not up to scratch. They didn't need to report that information at the time, but they were obviously the firm that were responsible for the first major Californian wildfires. It resulted in company bankruptcy. That is information that asset managers need to know today to make the right investment. So what we're looking at doing within ISO TC68 is to take all the work that has already been done in existence by all the bodies that Peter referred to. Those companies have to report those standards. That could be reported in XBRL, again, something that's already in play, used for both data analytical providers and also individual asset managers to extract that data and take it into their systems. So as well as the work that ISO is doing at the top, we also want to focus on the work that ISO can assist with at the bottom to get to the position we need to be at in moving towards a sustainable transition to a greener economy. Thank you.